because I think we have to put a disclaimer every 2 minutes
I
in
was going to say, yeah.
in the video. This is not a financial advice, and you should not be
Yes.
listening to any of us.
I will add that on
Yeah, please.
on the screen.
Yeah, we've been tough today. This
Yeah,
has been,
no,
I
it's
mean,
too tough. So I mean, I love
this is-
FashionTech.
Hi, everyone, and welcome to episode number 28 of the VC React podcast. Every week, we bring you insights and reactions from top VCs, LPs, and angel investors, reacting to the latest news on startups, VCs, and investment rounds. Let's jump into it with our amazing guests for today. Maxim Shkvaruk, Managing Director at Atlas Ventures, Salah, Partner at Pitlane Ventures, and Nour Allam, Investment Associate at Plus VC. And as always, my co-host Jamie Lane from FWDstart. In the video description, you can find more details on our guests, their LinkedIn profiles, and links to their companies' websites. Our weekly news are brought to you by FWDstart, a twice-weekly newsletter that breaks down what's happening in the MENA startup, VC, and tech space. Let's start with a public company news. I always wanted to say that. It's very rare in the Middle East to have a tech company public, but we have a few now. And we're starting with Talabat today. And because we're talking about them today, I thought we would start by taking a quick look at their stock price, see how it performed since their IPO in November. I know it's been only 3 months, but let's see what's happening to their stock.
I checked it last night.
Yeah, no comment? Okay. It's down 15%, almost 16%. Market cap is still high. I think it's around $10 billion. This is in dirhams, AED.
Mm-hmm.
We had 2 big jumps here and then back to 1.44. Any comments? Can we explain what these jumps are? Do we know anything? Maybe this is the news we're talking about today that went up for that news because it's from maybe 2 weeks ago.
It's very important to acknowledge that was the largest tech IPO last year. Let's say that. And the public markets have not been, I would say, kind to venture-backed firms that goes public since COVID. And if we look at most companies that went public, I think we're talking about 16% down here. I think that's thanks to them being listed in the UAE, where the market have basically practices in place to slow down the decline of stocks. If they were on NASDAQ or New York Stock Exchange, I think we might have seen what happened to not only other Middle Eastern companies who went public, but literally everyone else.
This is a story that resembles a lot the Southeast Asian story, right? So if you look at Grab and you look at Gojek, basically you'll see very similar trends. And as Mo said, this is a reflection of the local capital pools, which is very limited, right? It's like people selling a little bit, and you see like this kind of jumps. And I don't think it's a reflection of any M&A activity that happened. It's just the reflection of the market. That's pretty much it.
I agree, honestly. Like it's there's nothing out of the norm. You would say that there's some sort of inaccurate activity, but it's I agree with both Mo and Maxim.
And I should add on the M&A
yeah,
front as well. I would hope that it doesn't influence, because I mean, technically this Talabat acquisition was announced 1st of September 2024.
Oh, wow.
So it's been quite a while in terms of, it's funny the way news works, like, you know, that lag in terms of confirmed the 1st September by delivery here, this is going to take place and be completed at some point in 2025. Gets completed 25th of February and then later announced, and to big furore and what's going on, what does this mean? And in reality, we all should have known. It's been in the pipeline for about 5 months.
I compared that to Jahez and look at the number over a year. It's almost the same number.
I'd love to add something here. In the Middle East, we have activity level challenges. I don't want to say issues. So and this is why I guess many people decide not to go public in the Middle East, and I think that's still one of the biggest challenges to going public in the Middle East, maybe slightly apart from Saudi, is simply we don't have enough retail investors. Like in the United States, if Nvidia today announced that they have acquired Intel, which is, there is a possibility that would be announced this week or next week in a joint venture with Taiwan Semiconductor. That deal would send Nvidia up by 20-30% on a single trading session, because simply the market reacts immediately to things. When Talabat announced the news we're discussing today, and I was talking to my friends, and I was like, yay, I think they've done that, and they have done it at a very low price to please the stock market. But apparently there is no enough activity in the stock market to bring the stock up in any way, and the stock continued on the same trend, because on the stock market, if there is no enough activity, you're going down, or whether you like it or not.
I completely agree, honestly. Like, the notion of retail investment here is not, I mean, even a normal consumer that is on the stock market is not as savvy as you would see in other more, I don't want to say developed markets, but I mean developed stock markets. Like Mo said, even any M&A news that is interrelated to any stock will not actually shake up anything. I mean, it is shockingly low, the number that Talabat, the news that we're going to discuss today. I don't want to jump into it, but it's shockingly low for something like InstaShop and for something like the consolidation strategy that is happening in Q-commerce. But nevertheless, there's just the awareness of how things should go normally in the stock market is just not there yet in the MENA. And for a market like Egypt, for example, we're barely there, like barely there.
Yeah.
So,
But hey, maybe we can help with the media coverage that we do and the analysis that we do. Jamie, take it away, please. Give us the first story.
Yeah, well, look,
And
let's...
can you also explain the price? Because I saw that in the news you prepared.
Yeah, exactly. So look, I suppose that the thing to note with the price is that it's largely symbolic, to sort of disregard it
Yeah.
on one level, because it's part of this, as I mentioned, internal restructuring within Delivery Hero itself. As mentioned, first announced last year, before the plans to take it onto the Dubai Financial Market Exchange. It was just that it was completed last month, to mention 25th of February. And look, it's going to continue operating as an independent brand within the sort of Talabat grocery and retail vertical itself. And look, when you look at the numbers, obviously the fact that it's a symbolic acquisition price makes a lot more sense than that. You know, it recorded at 631 million GMV, and you know, grew 16% year on year. And now that it's going to be integrated with Talabat, you're looking at Talabat grocery and retail GMV exceeds $2.5 billion. I suppose in terms of the price, then if we sort of maybe break that down a small bit, because I do know it was funny. I posted about it when I first came across it, and I went to play basketball for an hour and a half, 2 hours, and I came back to, I don't know how many comments on the post being like, how has this happened? How is this fair? What's the deal with the price? This makes absolutely no sense. Should this not have been open to, you know, other bidders? You know, what's going on here? And look, as mentioned, it's a restructuring of the business. It's nothing sort of nefarious or unfair going on here, and it doesn't really reflect like a decline rather in InstaShop's intrinsic value in any way, shape, or form. So I think that's just important to highlight and reinforce.
Why do you guys think it's a symbolic price? Because again, quick commerce is a poster child of the whole kind of COVID era. We've looked at so many players in this space, and when you look at the actual net revenue margin, usually, I mean, GMV is huge, but your actual revenue, which is net revenue, is around 3%. All right, it's a good result. Like 3% is an amazing result. So if it's a 630 million and it's 30%, is like 18 million. So it's like 2x revenue. That's not bad. That's not bad at all. Like in my view, if those numbers are correct, I'm not sure. I don't know their numbers. Maybe their margins are way better. Then yes, but usually it's around like 3 to 5%. I might be wrong here, but I think it's a fair price. If that's
Do you think 2x for quick commerce is a fair price, fair valuation?
Totally, like totally. It's an e-commerce business. There's nothing revolutionary in this most business model. Obviously, it's operational excellence. That's a lot of things you can put there. You can add, now they add a lot of AI in there, obviously, how to deliver orders, how to do the routing, like all that. But effectively, it's an e-commerce business, it's a corner shop business, dark store business. So it's nothing new. And both all those businesses, I mean, not all, okay, we've seen a good amount of those, a number of those businesses in Southeast Asia. Most of them, 90% are under, like, because of unit economics. It's as simple as that, right? So unit economics doesn't work. In order to work, you have to make 30, 40 orders a month. If you have no competition, like now in Southeast Asia was GrabMart and what Talabat is trying to do as well, I guess. If you have no competition, as that's the only place, you don't switch on your promos, vouchers, you turn it all off, maybe you can make it work. Maybe you can make it work. But again, the unit economics of those businesses is horrible. I mean, I may be wrong. Some of them are really good. But those that I've seen, there's just 2x is optimistic. It's a really good multiple.
I kind of agree with Maxime because there is the part where the unit economics of e-commerce is just too complicated. Like people back in 2021, post-COVID, 2021, 2022 were crazy about the model. And a lot of investors actually flocked after the model because it was too uncommon for us to believe. Get your order in like 15, 20, 30-minute stops. This is insane. And from the comfort of your own home. But the unit economics usually requires a very, very high level of cash burn. It goes hand in hand, just like what Maxime said, for you to make it. Just like, for example, other loyalty and discounts apps as well. The unit economics are usually very fishy because there's a lot of cash burn that goes hand in hand with that. But I think why we think it's shockingly low, it might be fair from, a unit economics perspective or from a technical perspective. But at the end of the day, InstaShop has managed to create a brand name, especially in the pharmaceutical and beauty and healthcare area which always lacked on Talabat or which always lacked on other Q-commerce platforms in the region. So I think it's more of, goodwill, or let's say the brand name that did not take enough of a premium as it should have, in my personal opinion. But yeah, that's just my 2 cents on it.
I don't think that was an acquisition deal to look at it in a normal acquisition deal practices, because it was simply Delivery Hero
Willing to divest, I believe.
getting
Yeah,
rid of
their overall strategy to divest.
getting rid of an extra brand that is challenging their monopoly. And I'm shocked, honestly, and I have been shocked for years that Uber was allowed to acquire Careem. And because that very much have created a monopoly for Uber, whether we like to admit it or not. And that's Uber in the United States will never be able to acquire Lyft. And that's the ultimate capitalism, the ultimate corporate greed, and the ultimate corporate power. Yet you can't. Adobe could not acquire Figma. So what I don't understand, how Delivery Hero was allowed to have Talabat and Carriage and Zomato and Hunger Station and Outlook and InstaShop and iFood and the rest. And they went and acquired one by one. And by the way, they paid $1.2 billion for all of these companies combined. So firstly, these companies were never acquired at a premium. A huge reason to that is Talabat certain practices or Delivery Hero certain practices within the market. I think people are completely missing in the ecosystem and outside of the ecosystem on the point of that deal, because that deal means nothing to the ecosystem. Me and Jamie, which is basically we run the same company, exchanging assets. One, two, the reason why we had to say how much we're exchanging it for is because Talabat is a public company and we would have to file it. If Talabat was not public, we would never knew. Do you guys know how much Talabat paid for Outlook in Egypt? The same exact deal happened. Talabat was private back then, so we didn't know. So I genuinely think no one in the region should be having a conversation about how much Talabat paid for InstaShop, because that it's genuinely irrelevant. They're still both report to the same guy. the issue is, for how long are we gonna tolerate Talabat monopoly, especially outside of Saudi? Because thanks to Jahiz, it's very, very unachievable in Saudi. But in almost every other market in the region, Talabat have a monopoly now. And when Talabat becomes a monopoly, and I can speak about a few markets without naming them, the margins, their margins goes up simply by giving their partners, like whether restaurants or retail or whatever, they're sourcing their products, very hard time, much higher fees, and then everything here get passed on us. So right now, in a country like Jordan, Talabat feels like 30% more expensive than Carrefour or than any other retail. So now it's much easier, much cheaper for me to literally order from another brand. And
it's also very expensive for the merchants, for the restaurants, for the
yeah,
grocery
it's
stores,
beyond
etc.
expensive now, and that's allowing Kareem to somehow own a bit of the market. But for me, it seems like Delivery Hero will always have more money to compete with Kareem than Kareem.
Very quickly, before we move on to the next story, I have Talabat here on my phone in Jordan. They have food, Talabat Mart. They have groceries, health and beauty, stores, pickup, donate.
The only thing they don't have is medicine, because they're not allowed legally to have it.
Yeah. How can they grow? So Talabat is public now. How can they grow and add more value to their shareholders over the next, I don't know, 3 to 5 years?
Charge me more for delivery. So they're charging me at least now 50%, if not more, for delivery, and charge the merchants. I think they're charging the merchant at least 3x what they used to charge them. And they're gonna go up and up and up until we reach the point where some places in the US where Uber literally is taking 30-40% of not more from the share of the ride. We will get to the point where Talabat is going to continue keep adding also add-on services like advertisement, things like that, because with more merchants on the app, it's so hard for you to show up your restaurant or your grocery shop. So they're going to take 30% from you, from whatever you sell, and then they're going to take another 10% to promote it, and then going to charge me an insane amount for delivery. And maybe other add-on services and maybe financing services for smaller businesses.
You think it's authentic? Yeah. Financing restaurants, maybe. Yeah.
Why are we being so harsh with Talabat? Why are we admonishing these guys? I'm like, if you can, why not?
I mean, I will agree with Mo that there's some sort of monopoly that is being created, because I will talk from a VC perspective, and I say it with a lot of, I'm very shy to say it out loud. Nowadays, when we get any inbound deal that has to do with quick commerce or with food delivery, you look at the pitch deck and you're like, oh, it's
gonna kill them.
I'm like, there's no way. Like, there's no way that it's not the kind of market, or it's not.
We have killed our e-commerce ecosystem in the region when we allowed Amazon to acquire Souq, and we are killing any chance for our ecosystem to produce or to enhance. Because, by the way, the most important part about any monopoly, it's not they're gonna charge you more. They will never innovate again.
Yeah.
And you're gonna keep cutting your.
Well, wait. Let me push back. Let me push back a little bit.
But they are trying.
Yeah, cutting your benefits one by one until you barely have the bare service.
Yeah, let me push back a little bit. I'm seeing new models, and I'm seeing big restaurants moving to these models where they go to e-commerce or delivery enabler companies. Like, for example, they're pulling out of Talabat. If you are a big restaurant and you have a loyal base of customers, you pull out of Talabat and Kareem and everywhere else, and you create your own app, even on your website, you go to the website and immediately you see the menu.
How many of those
order
do you have in the region? Like how many?
We don't have enough. We don't have a lot, but I think it's because those are big companies, big restaurants with a huge customer base. They might affect Talabat, and they might let Talabat, rethink the model and try to innovate. I don't know.
No way. You're telling me the top 10, top 20, top 50 restaurants in the region are all off Talabat. That gonna impact Talabat in any way? Definitely not. Because firstly, Talabat is a lifestyle. It's like Instagram. You're gonna go on Instagram, consume whatever content is served to you. So when you go to Talabat, the first screen that pops up is the 10 restaurants that Talabat is giving you discounts from right now. And we all know that food is not LV jacket. Food is one of the most, if not the most thing that is price sensitive to 99% of the people in the world. Even price sensitive to the top 1% of the society away from dining, for example. So if I'm buying groceries from Costco that are 20% less than Safeway, I'm definitely gonna go for Costco, even if I'm not happy with Costco in certain ways. So we're talking about a market here where being fancy and being exclusive is not really adds up. Otherwise, McDonald's would have pulled off Talabat. McDonald's is on Talabat, and they also have their app. Domino's have their app. Now you're talking about the chains that sells to everyone that have a branch almost in every street in the region, right? They're not off Talabat. They cannot go off Talabat.
Obviously same against all sorts of monopolies, but I think it's a normal market dynamics here. Like you see the same thing in Southeast Asia, you see it in Singapore. Sorry, I'll bring it up because I have more experience in Southeast Asia, but I think like Middle East is kind of resembling the dynamics a little bit, some markets at least. There was the same thing in Singapore, right? So Grab was number one, Gojek, there are two apps, so a duopoly of those two apps, and they were like fighting with each other. And then it's kind of now it's almost 100% Grab when it comes to ride hailing, at least. The food, kind of the same thing, right? So people usually go to Grab to order their food. There's obviously Delivery Hero, there are some others, but this is a dominant one. But the question is on the merchant side of the things, right? Like at what point they should stop accepting orders from players like Talabat, right? Because I think there was some sort of exercise done on this. If you get more than 30% of your orders coming from Talabat, your bottom line is negative right away. So you have to be so, and I believe it will happen over time. Like the merchants will realize that they have a bit more power. So who has more power, Talabat or merchant? Do you order on Talabat or you order from your favorite restaurant? Now this is like two things you have to consider, and there'll be apps popping up. We're actually monitoring this space, which will like allow restaurants to build their own apps faster and to be like direct to consumer when they can actually control what they're selling. They can control the vouchers, they can control the promotions, they can control all these kind of things. And they can understand which consumer is ordering when and how often, because now they don't. I don't think Talabat is sharing, Grab is definitely not. Talabat is not sharing anything with the end merchant. They don't know that I ordered from this pizza joint 10 times already for the last week. They just don't know, right? So for them, it's just the same user ID. Like some user ID they came from Talabat. That's what's happening. But I think it's kind of this kind of all market dynamic will reset itself at some point.
One very quick sentence. I just want to use this platform to invite governments in the region to we're a very conservative venture capital market, and more and more monopolies would have very negative impact on venture capital activity in several areas. And you can ask your next guest or any venture capitalist, if they would invest in a Talabat competitor today or not.
No, I'm outright telling you, no one would. Like no one would. There's a lot of resistance. There's just the notion of the market won't take up too many players.
With the already insanely low venture capital activity in the region, I wouldn't want half of the verticals in the ecosystem becoming monopolies.
We're still in the same industry. We're talking about Ninja now. What's happening with Ninja, Jamie?
Yeah, so we do have some competition here. As for Hunger Station, it's actually Hunger Station's ex-founder who's come back to haunt them. I think there was a less than acrimonious exit from their founder, Ibrahim Al Jassim, back a couple of years ago now at this point. But he went away, he's founded Ninja, and now they're in talks to raise fresh funding at some point over the next month or two. at a valuation that reportedly, as per Bloomberg, is going to be over $1 billion. Rumored that that's going to be led by Riyadh Capital, the investment arm of Riyadh Bank, one of the country's largest banks. They also founded their own VC arm last year as well, if you recall. It was 1957 Ventures that I think we covered in nearly one of our first episodes. Actually, I think it was during the summer. So it was a while back. But I think given the size of investment here, I think likely not coming from 1957 because I fear it might eclipse the total fund size. So I'd imagine it's separate as far as that's concerned. But Ninja was only founded back in 2022. Not a whole lot out there publicly on one level, sort of regarding their funding. I know that they raised I think it was a seed round back in, it was either 22 or 23. I think it was 30 million and a post-money valuation of like 180, 200 million. But yeah, public listing on the cards for 2027 apparently, but incredibly competitive in Saudi, where I suppose there isn't that predominant player. You've Hunger Station, Nana, Jahez, Kareem, Noon, and Ninja all kind of duking it out.
Nour, what do you think of Ninja? What do you think of this news?
There isn't a lot of public information out there about Ninja to justify the valuation, especially in a time where valuations are actually being extremely scrutinized in the region, even in Saudi, like after what happened in 2022 and 2023, where valuations in Saudi were insane. There is something.
You say where? Are we still there, or we're done with that phase? Because a $1 billion valuation for such a company, is it fair?
I will speak in my area of expertise, which is early stage investments, especially in Saudi. I will confidently say that we're not over it yet, but there is definitely more awareness when it comes to the insanely booming valuations. I will tell you a funny story. I've never said it out loud. In Leap 2 years ago, I was sitting with a Saudi startup. It was idea stage. It wasn't even at seed stage there was nothing. Like literally, it was just idea stage. And I was sitting with the founders in a one-on-one meeting in one of the large tech conferences. And then the founder was like, "Khalas, we reached the point where we're gonna discuss valuations." But I was like, "So what's the proposed valuation?" So he's like, 32 million. But then his co-founder was like, "No, higher." But he's like 40 million. So is that your final answer? So I mean, initially, because there was very free access to capital, not even easy. It was literally free access to capital to get the startup ecosystem in Egypt up in Saudi up and running. The notion of regulated valuations or logical valuations was not there. Nowadays, because the market is becoming, let's say, somewhat more competitive, and the quality of good startups coming out of Saudi and other regional markets as well is becoming more logical, but it's starting to boil down or regulate itself. Venture capitalists are more aware now that it's not just a free ticket into the Saudi startup ecosystem. You have to actually pay for that price and you have to build on it and you have to build momentum on it for us to make money at the end of the day. Back to Ninja's news, I don't know how the unit economics of this business is going to justify the valuation, but I will say that it's quite strange at a time where valuations are being highly scrutinized, not just in Saudi, but in the region in general, because it's a chain reaction, I would say. Like funds are struggling to raise from LPs because LPs are quite resistant because of the historical data that comes with VC and because of how slow the industry is going and so on and so forth. And so venture capital funds are becoming more and more, I would say, logical by investing in
Conservative.
yeah, exactly. Conservative, logical. There's the mindset of growth at all costs, and I think Hassan mentioned that on one of your podcasts, is no longer there. So back to the piece of news, I think there's something again more strategic going on that we might not necessarily understand. I mean, Riyadh Bank historically have been very active in the food space, so they have Foodix, but yeah, they've been very, very active in that space. So there is, a trend line that is going on in here, and there's something that holistically they see. But I really am very curious to see like how the the health of the numbers of Ninja are going for a $1 billion valuation to be out there, especially that it's not a stepped, fundraising situation where they've been raising very early rounds and then Series A to Series B. It's just from one jump to the
Big jumps.
yeah.
So. Mo, what do you think?
I'm so sorry, Nour, and I'm so sorry, Maxim. I have to completely disagree. I think the valuation is completely normal, and the valuation might be not good enough for a founding team that as good as that founding team. I've been living the last 6-7 months in my life in the Bay Area, so I no longer look at VC the way we look at VC. I no longer consider the Saudi ecosystem comparable to any other ecosystem in the region. For reason number one is, would you say there is more money to put in funds in startups in any other market in the region but Saudi?
I mean, there is Qatar, but there are
no.
There are no startups. That's the thing.
Yeah, there is
There is capital.
this is an massively abnormal outlier that at the end of the day is going to service 500,000 people. So hard for me to look at Qatar in such way. But when you look at the historical household names from UAE, Egypt, Jordan, and Lebanon, these 4 countries are right now struggling to maintain enough venture capital activity, especially on early stage. If you tell me I've sold a company for $multi-billion, I'm starting a company in the same industry, learning from all my mistakes in the past, and I need $100 million or $500 million at $1 billion valuation, I'm definitely giving you that amount of money. That's number one. Number two in Saudi, what I think what a lot of people are missing about Saudi is those idea stage and seed stage companies, especially from founders who are quite older, quite more experienced than others in other markets in the region. And this is another key differentiator in Saudi. Founders' age group, founders' experiences are really, really different from Egypt, are really, really different from the UAE. We're not seeing 20 years old founders in their 20s in Saudi. They're in their 30s, and then some of them are in their 40s, and some are even in their 50s. So we have very experienced people who either have sold companies before or started companies before, or leaving STC after 20 and 30 years and leaving Aramco. Those founders are never in anywhere in the world are valued the same as a fresh grad or someone.
But I will disagree with you on this. You have the 20-year-olds in Saudi raising at insane valuations as well, just because of the hype that came with the
Yeah, I was about to say that other thing that leaves you with still with higher valuation, even on for a younger, less experienced group, is basically the most of average firms, above average firms, and I'd say not so great firms having so much money they cannot deploy in the top ones because the top founders have took money from the top venture firms. So it's very much, Saudi is very much like Silicon Valley right now when it's come to the dynamics. Maybe not not in terms of the size of funding, without doubt. Not in terms of what we're building, because yes, people in the Bay Area get billions of dollars of valuation because they're literally building AI and building crazy stuff. But at the end of the day, every market have its time and it needs to take its time. But right now, Saudi shares one very fundamental thing with Silicon Valley is there is so many firms who are willing to write you a check more than anywhere else in the region and more than we have ever seen in the region. And this is why we will see ex-founders get multi-billion dollar valuation. I was actually shocked to see this is only at 1 billion.
Okay. Maxime, you were disagreeing with your head, so.
I'm not gonna argue that much. I agree. Look, I don't think it's a comparison with Silicon Valley is correct because of the liquidity, obviously, all these kind of things.
Then I'm not comparing the volume or the size in any way. I'm just comparing the bracket.
Totally. But look, what do you expect if you have a $1 billion valuation in Saudi? What's next? What's next? What are you gonna do? You're gonna stay private for the next 25 years and playing valuation game? How are you gonna monetize that? Right? It's not even like I look in this news. It's a marketing slogan. It's not. It doesn't really mean anything, right? It's just okay, we want $1 billion. I hate when founders play the valuation thing.
But they're preparing for an IPO. Maybe that's why.
So I'm saying it's we don't know what's under Ninja's hood. We don't really know what numbers they have. We don't know whether billion is a great vision, right? Okay, we want $1 billion company. We want an IPO in 2027. Like I want to be a Batman or whatever you may call it. Like it doesn't really matter. It's just attracting attention. But Mo, I agree with you. Saudi is still learning. But the amount of capital and the amount of different qualities of money there will drive it to the sky. And unfortunately, that's not a good thing. I don't think it's a good thing. And yeah, it might be, it's not even a good thing in Silicon Valley, to be honest.
Venture capital as an asset class is an anomaly. So any attempt to make sense of it end up with you being too conservative to miss on all the good ones.
Yeah, we've seen that so many times in
That's
Silicon
true.
Valley. I'm not sure if we're having the same story here in Saudi, maybe. Jamie, we're staying in Saudi. Let's talk about tomorrow.
Yeah, Tamara, exactly. I couldn't let Tabby sort of steal the spotlight for overly long. So what is it? 2 weeks, 3 weeks later, they need to announce their play. So yeah, they've received a license from SAMA to provide consumer finance and BNPL services. So this follows, they did receive preliminary approval. I think we covered that at some point last year as well. So this makes them one of, I think, only 65 finance companies now licensed by SAMA. So with this, they can offer financing solutions that exceed like $1,300 ish. So obviously that does expand beyond the limits of its previous BNPL operations, and a broader consumer base, maybe diversify the financial products offerings that they have also. So yeah, they're trying to keep pace with Tabby, I think ultimately. Look, and they've raised a ton themselves, obviously. Also, the first Saudi unicorn.
Can I just say a very quick thing here? Another proof to what I was just saying is how a group of VCs on Tabby's side versus another group of VCs on Tamara's side are the reason we're seeing this competition in Saudi, and that's great news for the customers. And I think there is, as you said, there is another 65 companies. Some of them are startups that are also doing very well because of a third group of venture capital. If you tell me 10 years ago, I'll see VCs in the region killing each other over startups, I'd be like, okay, fine, keep dreaming. I'm genuinely very happy because of what's going on in Saudi, and that's gonna drive valuation up. These companies can go public. Early stage investors from the region will finally return money. That's the only way they can return money. Valuation goes up crazy. These companies goes public, or they sell their early shares in secondary market. Life is good. We're all happy. We have more money to reinvest.
Let me ask about the business model itself. How do you see the buy now, pay later model evolving with these big companies, big valuations, big investment rounds? Are they becoming consumer banks?
We did not scratch the surface. Look, for example, the Saudi market have a lot of behaviors that are very much similar like the United States. Man, we did not even scratch the surface. How much of the credit card debt or loans all across the region, not even in Saudi? Barely nothing. This number have the potential to reach the point of trillions of dollars. Completely fine in healthy ways for the banks, not for the consumers. I'm not here encouraging anyone to go take a loan from a bank. I'm just saying, and I'm not giving any financial advice, like it's another legal hurdle. All what I'm saying is these companies and the banks backing them, because you also have to account for massive amount of money going to these startups from banks as credit lines. Why? Because who's going to absorb this credit portfolios and loan portfolios eventually? I think Value, which is the Egyptian alternative of Tamara or Tapi, is doing great at that. They will lend all over the year, and then they sell their portfolio and lend and sell and lend and sell. So I think eventually Tabi and Tamara will do exactly the same. I think we did not even scratch the surface. There is a potential of trillions of dollars across the region, at least $1 trillion of that in Saudi. and we're gonna wait and see. And I think VCs who put money in specifically Tabi, because I think that company is exceptional across the board, are gonna bank great money when they go public.
Maxim, what do you think?
I think it's the buy now, pay later model is kind of in my world is kind of in the same category as in quick commerce. Right? Also kind of a poster child of COVID. Of like, oh, I need that chair, I can't afford it, let me do whatever, like BNPL. So they're playing on this. This is totally subprime. You talk to any bank, whatever they buying, totally subprime, poor quality, insane defaults. I'm not sure about the tomorrow though, or Tabby. I don't know their numbers, but based on what I've seen in Southeast Asia, it's horrible cohorts of users. They're buying something they can't afford, they can't even potentially afford. I'm not sure how regulators are doing their job, how good they are in assessing their scoring models. Because again, they really don't do much scoring, to be honest. So it's even a bit worse than a credit card. But ultimately, that's the same thing. So you're playing on the total illiteracy of some people. They're going and buying something you can't afford. Whether it's a good thing as for a business, I'm not sure. It's a good thing for the economy in general. Really, I'm sure it's not. You'll have a lot of defaults. You'll have a lot of problems. You have a lot of issues. And I agree with you, Mom. Like, this thing is gonna get big. It's gonna get even bigger. Like, and it's not gonna stop. And banks are playing this game as well. So I think it's and
The
if
banks
you
are
want to
playing
make
a very long game here. So if a
Yeah.
small group, if half of the portfolio defaults, is okay. We need the other half, especially in a market like the Middle East where no one have a credit card because they don't want to go say hi to the bank. So you will have to find a way to mediate between them and a credit card. And I see buy now, pay later doing great with that. Visa's happy, MasterCard is happy because they're helping some of them issue credit cards. And I think eventually we get you hooked and you're going to move to the bank.
I
And
think from a B2C perspective, like you guys are both talking about a B2B perspective, but from a B2C perspective, your question, Ahmed, was more of the evolution in the BNPL space. Unfortunately, there isn't much room for innovation. I mean, it's always going to be who has the ability to finance a larger transaction. And this is what Tamara did with their piece of news. The only competitive edge or evolution that they've created with taking the SAMA license, which by the way is honestly it's needed. I mean, I'm not against their move into Saudi, and I'm not against the move of Tabi and Tamara into Saudi. But I completely agree with Mo that it is creating something there. And BNPL is part of the economy, whether we like it or not. Alas, it's inevitable. But in terms of the B2C offering, there isn't much room for evolution except in the ticket size that you can take and except in the business lines that they open up for you in terms of education. The study now, pay later model is now very common, especially in Saudi and Kuwait and other markets in the region. Yeah, I mean, from a B2C perspective, as long as the other player is offering a larger credit line, everyone's happy, things are going smooth. So, but from a B2B perspective, there is a lot of thought process to be put into it, like what Maxime and Mo were saying.
yeah,
There,
it's
but
one evolution, but it wasn't Bitabi or Tamara. There is one evolution that is very, very important that can happen to the market. The startups that are gonna come in place to help you pay those loans and reschedule them on another platform.
Oh, wow. Okay.
There is another multi-billion-dollar startups. These are the ones I'm waiting for because those ones make insane interest rates. So, for example, you have your score because eventually we're gonna need a credit score that is public the same way it's done in the US and in the West. So when that happens, your credit score is gonna screw you over. So you have to fix it. And fixing your credit score is gonna become the next $1 billion idea in the Middle East.
I
I
had
think
a
we're
call with
already
an
seeing
investor
it.
who invested in Klarna. He was saying that Klarna started as a buy now, pay later model, but then it became a payment company for merchants, and they take
Yeah.
processing fees
Same as
for
Affirm.
payment.
They copied Affirm basically.
Exactly. And look, Tabi I think is doing the same thing. I think it's
They have been
wrong
doing it
to
for a
think of
couple of
it.
years.
Yeah, exactly. I think it's wrong to think of it exclusively as BNPL. I mean, look, there's an e-commerce play now with Tabby Shop as well, which you consider kind of the Act Two. They've kind of evolved into that discovery tool for consumers and an advertising hub for merchants. And I think they've been pretty explicit about the Act Three as well as entering digital banking in a more meaningful way. They've made acquisitions to that end. They're going to be going beyond, spending to savings, obviously acquiring Tweak. Remittances, I think, is an obvious play as well. And I would be surprised if we see, upfront capital for merchants growth and
Yeah.
working capital as well. So, I don't think by any means they're going to be, which we've seen in the US. Klarna obviously have gone into the e-commerce side of things. The firm has remained very sort of, steadfastly on the BNPL side of things and have stayed their lane as far as that's concerned. But I think just given the opportunity with digital banking infrastructure, how poor it is regionally, BNPL is just such an amazing low acquisition cost wedge for consumers. I mean, it costs them nothing to acquire a customer. They're already just leveraging, the integration on a merchant's web page already. It's like the most fantastic form of
I
customer
had an
acquisition.
example that we really overlook in the region to that. I think we, because of several factors, one of them is location and the other is the amount of VCs involved. We really look closely at Tabi and Tamara. I think everyone in the region is missing on the actual buy now, pay later that is really operating like the US, which is Value in Egypt. There is a company in Egypt called Value, partially owned by AFG Hermes, the largest, one of the largest financial groups in the region and absolutely the largest in Egypt. And they have asset classes across the board in almost everything. And Walid Hassoura, the CEO of Value, is a veteran in the industry. I think they were the first to basically, we keep nothing on our cap tables, we sell all our loans to other people. The second thing is check out with Value in person, not only in, and that's a very, very American thing to do. Like, for example, Klarna now, because they open in the US, they just have their stickers on things, like for me to go, like if you go to this shop, you can check out with us. So what Value is doing is basically telling you, go buy your iPhone from that or that or that or that shop, and we will
We'll do
finance
it for
you.
you. Yeah.
And when they do that, they're no longer benefiting from you. They're going to benefit from you eventually, or they're already benefiting from you at whatever interest rate there is there. But in the eyes of the merchant, they brought the merchant a customer. So the customer now have to pay them for that customer. So that's another
the merchant. Yeah.
Yeah. So this checkout concept, whether online or offline, Value is doing it very, very well in Egypt. And it's doing it across the board. It's doing it for your club subscription, for your school tuition fees, for a very, very weird thing, for like their Formula One tickets, literally. And we're not seeing that even in the GCC yet. So,
But you do know that for a lot of business lines or for a lot of non-traditional lines, like for education, for example, Value went on a very smart way of acquiring small startups, not necessarily in the acquisition model that we know,
yeah,
but when
hiring.
yeah, it's sort of is an acqui-hire, but it's not on paper. I mean, what happened was the microfinancing license for a lot of smaller startups in Egypt became 10 times more expensive overnight. Like it was literally one
Yeah,
figure, and
they
then we
benefited
woke
from the
up
market dynamics for sure.
exactly, and then we woke up the next day and it's 10 times more expensive. So a lot of the smaller microfinancing startups in Egypt that have raised money from VCs to get that microfinancing license for a paid-in capital of X suddenly needed 10 times that
money.
10X.
Walid is an expert, and I think you guys should have him sometime for
We will.
Yeah.
a buy now pay later episode,
Yeah.
and you will hear fascinating insights from him. And every time
I mean, what happened was Value started letting smaller startups that couldn't get the license piggyback on their license.
yes,
Which was very smart to do. Whether I agree with the value model in the Egyptian economy or not is a story for another day, and how lucrative it is literally a story for another day. But I mean, it was a lifeline for a lot of fintechs in Egypt for a very long time. It has been very flexible in integrating with a lot of fintechs in Egypt for a very long time. I would completely agree with Mo. A lot of the Egyptian society right now in the offline checkout phase or dependent on value?
Oh yeah, actually value allows you to check out the supermarket.
Yeah, I'm dependent on value
For,
sometimes. They allow you to
for
actually
groceries. Imagine
install
I
your
go into a
plane
grocery
ticket.
shop to buy a Coca-Cola or a
No,
bottle.
inflation is as crazy in Egypt as in if you go out to dine in a fine dining restaurant, you can check out with value. I would just say that, like, you can literally put your bill on value if you're dining at one of the top
I mean,
fine dining
you
restaurants in
you
Egypt.
can do the
Literally,
same with Tabby as well, in a
Yeah,
UAE
I
context,
mean,
at least with regard to Tabby card as well, just
yeah, but the
to
wild
reiterate as well.
thing, Jamie, is there is a chain of supermarkets that only opens at gas stations. How much money possibly you could spend at a gas station grocery shop, like or a supermarket? $10, 15, $20 if you're in the US. Literally, you can check out with value, like insane.
Come with me, Mo, and we'll rack up a good bill. I promise
I
you
think
that.
you should.
This is literally an alternative to the credit cards. Anyway, Jamie, I don't think we have time for two stories. Which
Yeah.
one do you pick? Do you want to stay with debt and talk about claim, or move to fashion?
Oh no,
Can we move to
let's
fashion?
let's go to
Let's
fashion. Yeah, let's go to
lighten it up
fashion.
a
Yeah,
bit.
yeah.
Okay, let's talk fashion.
Let's
We've been
do
pretty
this
tough.
financial. Let's do this financial
Yeah,
stuff because I think we have to put a disclaimer every 2 minutes
I
in
was gonna say, yeah.
in the video. This is not a financial advice. You should not be
Yes.
listening to any of us.
I will add that on
Yeah, please.
the screen.
Yeah, we've been tough today. This
Yeah,
has been,
no,
I
it's
mean,
too tough. So I mean, I love
this is,
fashion tech. I for one love fashion tech.
yeah, look, this is something we never really get the opportunity to speak about as well, regionally especially. So yeah, this was cool and I came across it. So Aya, am I pronouncing that correctly? Edit this
Yes.
out. Yes. Okay, fantastic. Okay, the Irish in me wanted to go Aya, so I'm glad. Okay, Aya. So they're a Saudi-based e-commerce platform focused on modest fashion. They've raised $1.6 million, and plenty of VCs joining in this round. So led by Kwarzimi Ventures, joined by Raid Ventures, Joa Capital, Fina Holdings, and angel investors involved here as well. Only launched last year, 2024. Essentially, their play is forecasting trends through real-time consumer insights and then connecting to local manufacturers with demand to produce the most popular styles. So it sort of reminds me of a Shein play to a certain extent. Maybe someone's more informed on this and they can tell me. But that's what came to mind. But yeah, so that's I don't know a tremendous amount else.
Honestly, I love the news. I just wanted to see their website, and I couldn't find a website. Honestly,
I think it's
let
an
me share
app.
my screen.
I couldn't find
Yes,
either apples. I think it's an
it's
app.
an app.
Yeah.
It's an app. I tried
Couldn't,
many
yeah.
times to find a
That's the
website. I
same.
couldn't, but then I went to LinkedIn, found the
Yep.
founder, got the company from there, and then from here I went to about, here you go. It's an app. And what they do is it's basically an fashion e-commerce app where you can see abayas and modest fashion. And they say here that they help you discover the new trends in fashion and modest fashion. It's a shopping experience where you can go through short TikTok style videos. And I find this very interesting. What do you think? Let me start with you, Nour.
Honestly speaking, from a very high level perspective, the news was very refreshing because fashion tech, amongst other typically female-led startup industries, are just very tabooed. I don't want to use the word taboo because it's too much, honestly, but they're just very stereotypical in nature when it comes to how it's looked upon by investors. Fashion tech, femtech, historically, even climate tech from another perspective. So to see large VCs like Raed and Khawarizmi actually commit to a deal like that, which is very culturally relevant to the GCC, is very refreshing. Like I'm happy. I'm loving it because usually a lot of fashion tech startups wouldn't really make it in the region because there isn't a clear exitable path like more common, industries like the ones that we've been discussing previously. There isn't clear scalability potential and so on and so forth. But for me, as a female venture capitalist, to see a piece of news like that, with something very culturally relevant like abayas and modest fashion in the region is very, very refreshing. The TikTok like experience part of things, that is the part that I want to comment on, It's too common now, actually, for social commerce and for D2C and for a lot of ways of selling, brands on applications right now. You have a lot of up and coming startups, a couple of them even in our portfolio, that are trying to make the experience of shopping more relevant through TikTok sized videos and through the notion of scrolling and through the notion of you being able to interact with other people if they've tried that style, if they've styled it in a certain way. One application on our portfolio actually has the TikTok-like experience for beauty brands, and you can see what's on your shelf. So every girl can share what's on her shelf and so on and so forth, and she can get interacting with other girls. So I feel like it does create a community and it does create a sense of, belonging, especially again for something as culturally relevant as abayas. And abayas is a huge market in the region. I mean,
Yeah, with the new designs I'm seeing in Saudi and in Dubai,
especially in Ramadan,
yeah,
it's
yeah.
insane. So no, for me, honestly, it's just refreshing. It's refreshing to see how it's going to scale and how it's going to grow, and which other players are going to start doing the same thing. But it is nice to finally see a new industry up and running on the radar. Fashion tech is just
Yeah.
one of the truly undermined industries in the region.
And Maxim, were you surprised that 5 VC firms and a group of angel investors invested in e-commerce and social commerce?
I'm not surprised at all. This is the thing that makes a lot of sense. I'm just not sure about the like whether the comparison with Shane is correct or not, because I'm not sure this is an ultra fast small batch thing, or they
Oh, it
just
is not.
doing this more in a traditional way, like big batches and things like this, but probably not. So this is all comes down to their distribution. I mean, I agree with you, Nour. It can't be only social media because the competition is too high, so they'll have to figure out something else on how to distribute this. I don't think they're going to open the traditional brick and mortar shops to distribute, because again, there's just too many of them selling like very, very kind of very similar. Figured out something about the production, right? How to outsource this, how to control the batch quality, how to do this. This ends up being quite operationally demanding business. But I'm sure they're doing something that VC saw in there to back it. It can be just an e-commerce player. It should be something else behind the scene.
I'm not
Well,
really familiar with the model, but I think what they do is they connect with local designers. So
yeah,
the
they mentioned that. Yeah.
the operational hurdle of things are partially shared with the designer themselves. So they don't do the production themselves, I believe. I'm not sure.
Yeah,
Well,
but they have to deal with all that stuff like logistics and all that. They can't be just the marketplace, like it's just, okay, you buy from this designer. The people will go and buy from this designer going forward, right? They have to, somehow
Maxim,
aggregate this.
I wouldn't say that buying abaya in the Middle East is a struggle.
It is,
Buying
and I mean, it is a
buying a good
decision. It's a
abaya,
heavy decision. Yeah.
I think if they only have the value proposition of being a marketplace for the top 50 designers of abayas, or let's say top 40 or 30 of the top 50, if that's the only value proposition they have, they're gonna do very well. Because every time I'm going to Saudi, I'm usually going with friends, and I go to Saudi now way more for entertainment related reasons than actually anything has to do with work. So you have the things that you have to wear, the ladies have to wear abaya, and the things you don't. And you also have I think I would look at this app as more of regional based fashion than not only abayas or only for women. Because also when I go to Oman, I want to buy a masar. And how am I gonna do that? I have to go to the local market. I used to live in Oman. It's impossible to just wake up in the morning and decide you're gonna buy one. Someone have to take you to their favorite designer or favorite
Taylor, Khayat.
tailor, and then you keep going in circles and you end up wasting days to get one piece. And the same applies in the UAE, the same applies in Qatar, the same, because also what many people don't know about the Middle East is the shmag I'm gonna wear in Jordan, it's not gonna work in Bahrain. My shmags that in my closet right now do not work in other places. And
Yeah, Muhaddab.
yes, my thobe my whatever thought I have here does not work literally anywhere else, and the thoughts I'm gonna buy in Saudi, they're gonna work in the United Arab Emirates. So I'm not only seeing this as a abaya shop, I'm seeing this as whatever Middle Eastern cloth that you want, and we're seeing an abundant amount of foreigners either moving to the region or visiting the region at scales that we have never seen before. And I'm very, very excited for such a company to exist. I wouldn't call it a fashion tech. It's more of an e-commerce, and I think the model, the way it's presented, is insanely undefensible and allows so many others to come on board. And this is why they did not get funding at $1 billion valuation, because it's going to be very, very tough market to operate in. I just would love to see how typical e-commerces like Nour and the others, or maybe other smaller high-end fashion companies react to such news, because you getting money for such an idea from venture capitalists reopens the door again for a sector that I thought that is off the table. Because I think since Modista, which was a Turkish-Palestinian company, has got a couple of millions of dollars, I think one of the rounds was led by Wamda Capital. I don't think I've heard any similar news. And that was, I think, maybe 4 or 5 years ago. And I don't think I've seen anything since. Yes, so it's a news we welcome. More fashion, please, in companies that work. To be fair, with fashion, whether fast or high end, the typical venture capital story, that's also,
Yeah,
I would say that's not the typical story that I would expect venture capitalists to write 10 checks a year for. Just also to be fair. But I would say retail and family offices and many others would definitely be interested in the sector.
Yeah, and they might acquire such companies. Jamie, do you have a kandura or a soap and shmag?
I do. I've
You
3.
do? Okay. Nice.
I think I saw a picture of him with
that
one.
proves your point, Mo.
No. I think I saw him. I saw a picture of him in a one.
You definitely have. You definitely have. And look, and Zoe, my fiance, I mean, she has 4 or 5 abayas. So I mean, like, yeah, you do, and you start getting interested. And you're like, okay. I mean, I'm not confident
And then
enough
the
to just
minute
be
you get
constantly
your
walking
first
around.
one, now you need a collection.
It's true.
You need a collection now, because you discover that there is the bunch for the winter, and there is bunch for the summer, and there is bunch for formal, and there is bunch for casual.
Mo is hooked, apparently. He is hooked.
Yeah, I went to the Grand Mosque last week, and the one I was working
is something I grow around, and definitely having a proper shmag, and you have the shmags that are insanely expensive. There is no way I'll take them anywhere, so I have the cheaper ones, and then you have the ones that has all the handmade stuff, and that you feel so proud wearing on the national day. So yeah.
Well, with that, thank you so much, Nour, Maxim, and Mo, for such a lovely episode. I think it went just natural conversation flow. I love this. Thank you so much. We really enjoyed it. Mo, we wanted to make a joke about you and Mo Salah in Liverpool, but we didn't make it.
Oh, we never
Jamie
worked
promised
it
to
in.
make it, but he didn't.
Jeez. I'm sorry. You try and edit it in. Time goes right.
I'm glad you didn't. I genuinely highly appreciate it. And yeah, the guy was supposed to go for a Ballon d'Or. It's not happening anymore. So
I know.
quite devastated as a Liverpool fan, and as an Egyptian, and as a Mo Salah fan. Yeah, so you can make that joke the next time I'm on the show. And honestly, I love the idea that you guys have, and I think the show is really great. I did not expect the episode to be that fun. So huge shout out to Nour and Maxim and to you guys for putting it together.
Amazing.
Thanks
Would
so
love
much,
to
man.
have you again soon.
Yeah.
Thank you so much.
Thanks so much, everyone.